Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. This is Daniel Lam, your host for the podcast. With the relaxation in quarantine period for incoming travelers into Hong Kong, a colleague of mine is finally traveling to Japan to see her daughter, who is studying there. They have not seen each other since COVID-19 started. And of course, my colleague did note how cheap the yen has become. Now, a week ago in the podcast, we highlighted that the trend is for further weakening in the yen. Since then, dollar yen did break above the key psychological level at 140. The key driver has been a divergence in Fed and BOJ policies. While the US is experiencing high inflation leading to tighter monetary policies, Japan is one of the few major economies that does not appear to be experiencing as many issues with inflation as the rest of the world. Hence, they've been keeping an ultra-loose monetary policy. In fact, our Global Investment Committee does not expect any significant change of policies from the BOJ, meaning that the yield differential between the dollar and the yen is likely to widen further, supporting further upside to dollar yen. Now, technically, the pair already broke above last Friday's high at 140.79, and we're expecting further upside in the pair over the near term. It has support at 139.39 and 137.46. Now, are there any opportunities in other asset classes in Japan stemming from the weakening yen? Well, Japan exported equities are worth a look. I was looking at publishing some equity derivative ideas on Japan over the last week, given the move in dollar yen, of course, and I noticed that the automobile stocks in Japan are looking well supported at this stage. Intuitively, you would think that they will be the first port of call when one looks at Japan equities, particularly on the exporters front. Also, you should remember that, in general, the positioning on Japan equities is very light. Valuation is also very attractive, with Japanese equities trading at 11% discount versus global equities on a 12-month forward PE ratio. This is significantly cheaper than its historical average at 6% premium. That's all from me today. As always, if you enjoyed this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details on the latest market insights, subscribe to Standard Chartered Money Insights.